How are we getting to 5 million?
Now that's
slowly.
Yeah.
And then all at once.
Yeah.
By the way, if you got to 5 million, because we have a grid to show it, it's that gold would be doubled in price.
Why would we have a Bitcoin strategic reserve?
I think it makes a lot of sense.
Why?
Well, we already have one. We've confiscated Bitcoin.
All right, but why do you think it makes sense?
Why should we buy more? If they do that, I think the price goes to $1 million too. I just don't know that they're going to do that.
Yeah, but then if Bitcoin gets to 36 million, there's no national debt.
The conversation then shifts to Bitcoin's potential future trajectory. A key point of discussion is whether Bitcoin could reach parity with gold in terms of market capitalization. Gold currently holds a market cap of around $21 trillion, whereas Bitcoin is only at about 10% of that. If Bitcoin were to match gold's valuation, its price would surge dramatically. Lee and his counterparts estimate that gold could rise to $7,000 per ounce under certain conditions, further solidifying its role as a stable asset. One argument raised is that millennials' preference for Bitcoin over gold could shift capital away from the traditional safe haven asset, potentially reducing gold's market cap. This suggests that Bitcoin could reach parity with gold, not solely due to inflows into Bitcoin, but also due to a decline in gold's overall valuation. Nonetheless, gold has quietly outperformed the S&P 500 in 6 of the last 7 years, proving that it remains a solid asset class.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
How are we getting to 5 million?
Now that's
slowly.
Yeah.
And then all at once.
Yeah.
By the way, if you got to 5 million, because we have a grid to show it, it's that gold would be doubled in price.
Daniel, previous chart.
Yeah. Gold would double in price.
So this is if crypto reaches parity with gold in terms of market cap?
Yes.
Okay, it's not there already?
No, it's only 10% of the value of gold.
Wait, what? How much gold is there in the world?
There is
10?
$21 trillion of gold.
How much crypto? 3?
Bitcoin's 2.
Bitcoin by itself is 2.
Yeah.
Okay. So if the amount of money millennials choose to put into digital gold rivals the current amount of gold, you know what the flaw in that logic is? If there's this huge predilection for Bitcoin versus gold on the part of millennials, then the valuation of gold will shrink. So you might get parity, but that's because the amount of money in gold goes down.
Yeah. You know, I thought about, and I got the numbers a little wrong. Let's say gold has to go to like $7,000 an ounce. However, you know, I heard something interesting and I didn't realize gold has outperformed the S&P 6 of the last 7 years.
Yeah.
So
quietly too.
Yeah. So gold isn't a bad asset class, but Bitcoin. So I think even if it's not like millennials need to buy gold for gold to go up, you just need the boomers to hold it.
Why would we have a Bitcoin strategic reserve?
I think it makes a lot of sense.
Why?
Well, we already have one. We've confiscated Bitcoin.
All right, but why do you think it makes sense?
Why should we buy more?
If Bitcoin becomes the backbone of a new financial system, which it really is, like, you know, it's the king of the remittances. It's it is the immutable blockchain, and it's people have a lot of reasons that they trust it. In 14 years, no one's broken it, and there's no replacement. Then if the U.S. owns 1 million Bitcoin, they'll be the largest holder of Bitcoin in the
But we're
world.
just what are we doing with it? We're facilitating trade with it, or we're just holding it?
Well,
if it's a strategic reserve, with a strategic petroleum reserve, they use it. When there's like an oil shortage, or there's a problem, or there's a dislocation, they will tap the reserve.
But yeah.
And then when prices calm down, they'll add it back. How does Michael's question, how does a Bitcoin strategic reserve function?
Okay.
Would there be a shortage of Bitcoin? And we have
to what end?
These are good questions, but keep this in mind. So oil's a strategic commodity.
Clearly.
Okay. Now, oil only has 7 buyers, really. It's the refiners. oil like that's produced everywhere, it's really just bought by refiners.
Who then turn it into something
Yeah,
useful.
to distillates and gasoline.
Okay.
But there's really only 7 buyers. And so if you look at oil, the oil market that's bought for distillate, and then say, take the total trading volume of oil against that, what do you think the ratio is?
I don't know, tiny, right?
400. For every dollar of oil that's bought at a pump,
I
it's traded
see.
400 times on speculation.
Wow.
Wow. Okay.
So you need a strategic petroleum reserve because there's so much price speculation around it that
Okay.
you could be whipsawed if you didn't control some way to manage prices.
Okay. So Bitcoin is the same.
Yeah, so let's
Tons
say
of
Bitcoin,
speculation around
let's say
it.
that it becomes 10% of people's net worth and banks start to use it to secure information. Because remember, the blockchain, you can just store 1 pixel of a 10 million page document, but the hash will detect if you changed 1 pixel. So that's why you're going to use the Bitcoin to secure information, right? Well, that's really valuable, but then wouldn't the US want to be able to control this blockchain or exert some way to censor it somehow?
Okay.
And, once banks start trading Bitcoin, like Citadel, it will probably be the most profitable product for Goldman and JP
Because of
Morgan.
how volatile it is,
Yeah.
bid-ask spreads are wider.
Correct. And if
Okay.
oil's traded 400 times, Bitcoin might be 1,000 times. It's going to be a hugely traded commodity.
Okay, so this is a productive thing, even though, to my earlier point, we have a budget deficit, we have tons of debt. This is a project that we should also undertake now because it might come in handy at some point in the future.
Yeah, well, the US owns 200,000 Bitcoin, as long as it's not, those keys are safe.
Okay.
And so let's say they buy 800,000 more through the Exchange Stability Fund, so another 80 billion.
If they do that, I think the price goes to $1 million too. I just don't know that they're going to do that.
Yeah. But then if Bitcoin gets to 36 million, there's
Yeah.
no national debt.
Okay. In that fantasy, who do you sell the Bitcoin to pay off the debt, though? I've heard that before.
Michael Saylor, hello.
So Michael Saylor buys the Bitcoin from us, and we use the proceeds to extinguish our debt.
Well, it's not, you don't need to sell it because it's almost the same thing as like if NVIDIA is 3 trillion, it's not like someone would say, oh, well, you're going to liquidate all 3 trillion, so it's not worth 3 trillion. It's as long as the value is stored at that level
Okay.
and you can still trade
Then
it.
we could say it's an asset that offsets the debt that we have. We don't have to use it to pay down the debt.
Yeah.
We could just say we're backing that
Yeah.
debt with this asset.
I'll guarantee you if Bitcoin got to 36 million, okay, theoretically, the US cost of debt would go to 0.
Okay.
They would have because they have 0 net debt.
What's going to happen on Friday?
I think, okay, so the base case, I think it's a really bad jobs report, maybe 50,000. I think the market panics, but Powell's speaking at 12:30 and you're going to see the May odds 100%.
Because Powell's gonna make it all better. Like he's gonna calm people down. Like we're aware of the situation.
Well, because this is like now with Atlanta, GDP now negative and then jobs, this is not like the Fed can sit there hawkishly.
Turning to monetary policy, Lee discusses the Federal Reserve's next steps amidst weakening economic indicators. He predicts a bad jobs report, possibly as low as 50,000 jobs added, which would create market panic. However, he expects Fed Chairman Jerome Powell to step in and reassure investors, ultimately stabilizing sentiment. Lee believes the Fed's tone will shift toward a more dovish stance with an increased likelihood of rate cuts in May. The bond market is already signaling that the Fed is late to cut rates. The 10-year Treasury yield and market expectations for rate cuts suggest that monetary policy is currently too tight, which is beginning to strain the economy.
Oh, yeah, because the Fed's already comfortable that they've got a big margin of cushion where rates are. They're already running tight.
Right.
And now they're assessing how much damage it's doing to the economy before tariffs. And this is the thing, we know a lot of the supports have been rolling off at the start of this year. That's why consumption's down. And then tomorrow's a jobs report, but already it's foreboding, like the Challenger job cuts ADP. If we get a 50,000 jobs report tomorrow, there's a huge question on this dual mandate because full employment, we're risking a real collapse in the employment market.
Does the market rally or get killed on that sort of print? I think it gets killed.
What, a bad jobs report?
Like that bad.
Yeah, I think there's a panic, but then there's a rally.
Yeah.
Because I think the Fed put is back, and
Yeah.
then I think the Trump put has to come back.
The Fed wants to cut. So this does enable the Fed to cut. It's just not the circumstances under which it wanted to cut.
Yeah.
I don't think the Fed wanted to have to cut. I think the Fed liked the position it was in, where it was like, we will if we need to.
Yeah.
Man, maybe we'll do one. Maybe we'll skip a month. Like, that's where they were. They can't be there still. Now they have to. Now they actually might have to react.
Yeah, I mean, in a way, the bond market, I mean, I'm sure people interpret, I think is arguing the Fed is late to cut.
Okay. Why? Because of what the 10-year has done, or?
Yeah, where the 10-year is, with the implied, like even the odds of a May cut. I didn't see it today, but I bet you it's well over 50% now.
A cut in May?
Yeah.
Oh, I would bet it is.
Yeah, so that's a Fed that's actually kind of being now judged to be behind the curve. And so if they're cutting, it's going to be a welcome pressure valve release because the market's pressuring the Fed to do something.
Right. Market people love to look at AAII and act contrarian to that. Last week, one of the things we were talking about on the show was how fast the bears shot up to an almost record level, like higher than they were during the pandemic in that survey. I think the percentage of bearish respondents hit 55, which is an unheard of number. And then when you consider the fact that at that time, the S&P was only 3% off a record high, it was really weird to see how fast sentiment turned negative. In hindsight, a week later, that bearishness was not a great contrarian signal. The bears had it right. What do you think about that? I know you follow AAII.
Yeah.
You look at that stuff.
I follow it, and I think from the right time frame for us is like 6 months.
Okay.
Because then it captures, because the survey is done over a period of time, and so it doesn't always capture what the market did that week anyways.
Okay.
But
It's cumulative, you're saying.
Yeah, it's
Okay.
kind of the same thing like when these economic surveys are done. Sometimes they're done like finished by Wednesday or Friday, and then so you actually get some weird differences because of what's happened in those 3-4 days. I don't think if there's a recession, small caps outperform. So like on that downside, I don't think it's protected. But if we look at the composition here, I actually am surprised it's done so poorly because, for instance, healthcare's the best performing sector year to date, and you can see healthcare is a bigger weight in small caps. Financials have done well year to date. It's a bigger weight in small caps. Industrials have outperformed year to date, and it's a bigger weight. You have less exposure to tech. And
So what's weighing the small caps down this year?
I think it's the push button because
Just people saying sell small caps.
It's higher beta.
Yeah, so they're derating. They got cheaper.
Okay.
Oh,
not
wow. Small
because-
caps are down 15% in a 50% drawdown. I didn't realize that.
Yeah, so that it's not like someone's doing relative value.
They're selling the ETF.
Yeah,
They're selling
just
IWM.
Selling IWM.
It's like the first thing people sell.
Yeah.
It's like, oh, you're worried about the economy? Get that shit out of here. We're not
Yeah.
going to need that. We'll buy it back later.
Yeah.
Yeah,
But as
I
you know,
agree
what's
with you.
working this year is like financials, industrials, healthcare. That's like that's already more than half of the Russell. So it should be a good index, but and I think the individual stocks have been, but as an index, hasn't worked.
Lee points out that the Fed likely didn't want to cut rates under these circumstances, as it preferred to maintain flexibility. However, with economic growth slowing and key indicators deteriorating, the Fed may be forced to act sooner than expected. Another key point Lee raises is the sudden surge in bearish sentiment among investors. The AAII Sentiment Survey recently showed an unusually high percentage of bearish respondents, higher than during the pandemic. Normally, extreme bearishness can serve as a contrarian buy signal, but in this case, the pessimism may have been justified given recent market turbulence. Please like and subscribe.